Hi friends, it's Christy. Thank you so much for being with me today. I want to talk for just a few minutes about biweekly payments. So you can set up biweekly payments on almost any installment loan that you have. So an installment loan, some examples, your mortgage, your auto loan, student loans, it's a set dollar amount that you've borrowed. You've agreed to pay it back over a set period of months or years, and then you have a set payment every single month. So this doesn't apply to credit cards. Those are revolving accounts, and those payments are based off of the balance that you have outstanding at the time that your bill cycle hits. I'm just talking about installment loans. So let's use the example of a mortgage, and we've got a $250,000 mortgage, and let's say the interest rate that you're paying on this mortgage is 4%. If you're a good little borrower and you pay your mortgage every single month on the first of the month, as promised, as expected, and as you said that you would, you will pay over time over $179,000 in interest over those 30 years. So you've borrowed $250,000 and it costs you $179,000 to do so. Now, if you can set up biweekly payments with your loan servicer, so the company that you make your payment to, you call them or you get online and you make a request for biweekly payments, what you're doing is you're taking half of your mortgage payment every other week and paying it. So here's how that works. There are 52 weeks in a year, and then you're going to make a payment every other week. So you've made 26 half payments, which equals 13 full payments, but that's paid over 12 months. So every single year, just by default, just by setting it up this way, you've made a full extra mortgage payment. And do you want to know what that means? That means you've saved yourself over $29,000 over those 30 years in just interest. It's just been cut out because you've paid it off early. It's an extraordinary tool that truly doesn't hurt. It actually helps for me to have my largest cash flow item, which is my housing payment, out of my budget, cut in half and removed every other week. I love that because I don't have to save up this big amount of money and have it drafted out on the first. I have it auto drafted every other Friday, and it's just easier to budget the funds in my account to go towards my other goals, which are, savings and then paying my other bills on time, right? And then having a little bit of a splurge fund so we can have some of those fun moments in our lives, right? So I hope that you get just how powerful biweekly payments are. See if you can set it up like that with your student loans and your auto loan, and definitely with your mortgage. Most companies don't most companies don't charge a fee to have this happen, and then they just set it up auto draft. So just like as if you were paying it once a month when that bill cycle comes, you would just have it auto drafted every other week. It's powerful because an installment loan has what's called a per diem charge, which is Latin for per day. So it's a per day charge of interest. And you can find out quite easily what your daily interest charge is. Usually if you look at a statement, or you can call your loan servicer, or the information when you had started off this loan should show you a daily interest charge. So what you're doing is you're cutting out all of that additional time because you're paying it early, and you're paying a little extra because you're making that extra payment every single year. So it could literally take about 2.5 years of payments off of your mortgage over the designated 30-year time period. More importantly, it's growing the equity in your thing more quickly. So what I mean by that is equity is the difference between what something is valued at and what you owe. And you're paying down what you owe faster and faster and faster, and so you're growing your equity. I hope this brings you value. It's a tip that can help just increase your net worth that much faster because you're getting rid of that debt that much faster. And I believe that it can save you thousands of dollars if you do this on your mortgage, on your student loans, on your car payments. It'll save you tens of thousands of dollars over time. So definitely use this strategy. Thanks for listening. I appreciate you being with me today. And until next time, my friends, stay well.